Hey, how y'all doing? So in this video, we're going to be talking about GBP and my short trade on this today. So I took this trade on my big account, but I also took it on the small account. For those of you that are not aware, I am doing a small account challenge this year. Okay. I am starting with $2,000, and my goal with that small account challenge is to grow that into 100K. And I have a video on my small account challenge and how I'm approaching that. And I'll leave a link to the video that I made with all the details in regards to my small account challenge. But I posted all that on Twitter today, and I posted it in my Discord chat, the trade that I took for that small account challenge, and it was on GBP. And if you're not in my free Discord chat, if you're not in there, what are you doing, right? What are you doing? You got to be insane. Why are you not in there? It's 100% free. Doesn't cost you a dime, and you can connect with so many great traders in there, so many like-minded people in there. You can consume my educational material, ask me questions, get access to my free daily watch list where this play was posted. And that's not your invitation to follow me, right? That's not your no, don't misconstrue what I just said just now. I didn't say join my chat and blindly follow me, because it's not going to end well. But you can join my chat, watch how these plays unfold, because I did post this beforehand. I gave you an exact game plan on this, like literally to the T. I gave the exact game plan on how this would play out, and it played out. That's not to follow, but that's to learn. Because if you really consume my content day in, day out in that chat, what you'll find is you start to think like me. You start to see things like I do with time. And that's just being exposed to it. That's what usually just happens, right? But yeah, so there's going to be a link to that in the video description. And also one last announcement before we get into the trade review. All right, so bear with me. One last thing before we get into the trade review is just, as you guys understand, my mentorship is open. It's been open for the last couple days at this point, but it is going to be closing here very soon. Now, right now, I have 7 more slots. I have 7 more spots left for the mentorship. So those spots are probably going to be gone within the next couple days, maybe even by tomorrow. So if you do want to be a part of the mentorship, if you do want to level up your trading, if you do want to learn how I trade, if you want to be keeping close contact with the small account challenge. Now I'm going to talk about the small account challenge on the public YouTube as well, so don't worry. But if you kind of want to just keep a little bit of a closer tab on it and be a part of my live streams, etc., there's going to be a link to the waiting list in the video description. Okay, so the next 7 people are getting in. After that, it's done with, and it's closed for a long time. Okay, it's just how it is. I'm already overwhelmed enough, or I wouldn't say overwhelmed. I just have my hands full with the people that I have right now, you know, doing all the one-on-ones and all that stuff, because this isn't a regular chat. It ain't a regular chat. I'm actually really make sure that my traders succeed. So I keep really close tabs on them. I check up on them. So only 7 more people, and we're cutting off at that point. So if you do want to take part in it, there's going to be a link to that in the video description. Now, enough with all that. Let's get into the trade review, right? Because some of you are like, oh, okay, come on, get on with it, right? So here we are, GBP. This is what we were talking about this morning. And so there was a few key points of interest we had noted right away on this GBP. So we ended up having this big 4-hour bearish imbalance right here. That's a point of interest for me right off the gate. Right out the gate, that's a big point of interest for me because it serves as resistance. It serves as a draw beforehand because price, it had this big move lower that creates an inefficiency. That's an area that was not efficiently delivered. Therefore, it serves as a draw because price wants to rebalance the price action. That's what we saw happen right here. It came up and it tapped up into that imbalance. But here's the key thing. Once it taps up into that imbalance, that's a level of resistance. It's a higher time frame level of resistance. Okay. Now, when I got to my PC this morning, price was sitting like right here. Look at my cursor. That's where we were sitting because I got to my PC, I sat down, and this was where it was at. And as I said in my Discord chat, in the mentorship chat, as well as the free Discord chat, I figured we were going to have another ramp up right here. I did not trust this little fair value gap right here at all. I figured it was going to ramp up. And there was a few reasons why I was anticipating that. Well, I looked at what price was telling me, the storyline it was telling me. Look at how it was wicking beneath this level right here, aka that short-term low. It was respecting it. That is stop run signatures that's being displayed right here. A market structure shift signature would be a strong close, the fair value gap. We got the fair value gap, but it's respecting the level. And I figured, being that it was still bullish market structure on the 15-minute chart, and also I noticed that we had an 80 or we had a 50 institutional price level up here. Major market reversals tend to occur around institutional price levels. So I saw we had this push up right here. I saw we had this flush right here. I saw we created this imbalance, but here's the deal. We had the 50 level right up above it, and we were respecting this level. So then I came to the conclusion very quickly that I believe that this run right, or this flush that you see right here, is a fake run to create liquidity above this high before we get that final push lower. I came to that conclusion quickly. Just off the information that I just gave you, the 50 level up above, the respect of this level, the market structure bullish on the short-term chart, I came to the conclusion quickly, and then right after that, boom, ramps up, takes the highs. Now we're getting that manipulation swing right there, coming into London session, because London session is prime time for that manipulation swing, as I've taught you guys here on the public YouTube channel. I've taught you that. So right here, boom, we get that push up. We take out this high. We price up into this 50 institutional price. So I still don't like it yet. I still need to see this thing give a reaction. I need smart money, big money, whatever the fuck you want to call them. I need them to step in and say, hey, we're ready to send this thing lower. So how do they talk to us? How do they show us that? Well, they show us that with a shift to the downside. So you can see right here, we pull back. We're kind of putting in these swing lows right here. We're working. And then boom, we have a big move lower. We get our strong close right here beneath that short-term low. That's what we want to see, strong close beneath that low. And then right here, we created the fair value gap right there, as you can see. We got the strong close. We got the fair value gap confirmation. We got a higher time frame point of entry. We got an institutional price level. And then where does my focus go next? To the sell stops below, which is low of day. This is the absolute low before we got that big push up right here up into that 50 level. So we understand, we can anticipate there's a big bucket of sell stops right here. And that's my target. I'm targeting those sell stops right there. Okay. So my entry, I ended up getting in on this push up right here into this imbalance. It completely rebalanced this price action right here. And I got in on that push up right there. And then it came down, took out this low right here. Now, some people, they see this and they're like, oh, hold up, Mike. It looks like you didn't follow your rules or something, because that would be bad risk reward, right? Because your stop, like as you said, the stop is above the liquidity run, right? So like you get this push up right here, this liquidity run, that's where your stop would be. So if you're targeting this low, that is awful risk reward. That ain't good risk reward. So you broke your rules, didn't you? You degenerate? Nope. Here's the deal. This play was a little bit of a special scenario. Okay. And that's not me saying that just for an excuse to break rules. I'm going to explain it for you. I'm going to explain it to you why it was. Okay. So I want you to notice how there was only one fair value gap in here on this push lower on the shift. It was right here. Do you see any other fair value gap in there? I don't see no fair value gap in there. It's all balanced price action. This is the only inefficiency in here. So price came up and it already rebalanced that price action right here. There's no other fair value gap up above. So if price was to come up right here, guys, and if it was to close above that fair value gap, that's actually not a good sign. That's not a good sign. That's a sign that it probably wants to move higher. Because then that's what we call an inverse fair value gap. And then that fair value gap, you look for it to serve as support and then ramp up higher. We don't want to see that. If we're truly correct that this thing is bearish, that it wants to move lower, that it wants to take that low right there, it should not close above this fair value gap. Now, if there's another fair value gap above, that's a different scenario. Then I would allow that if there's another fair value gap up above, but there's not. There's not. And then also another thing I noticed, once we came up and rebalanced that price action, another place to keep your stop, as I've outlined on this YouTube video or in this YouTube channel, is above the fair value gap high. Right here, we have a fair value gap high. That's another area to keep your stop. And guess what? With everything that I just told you, that it shouldn't close above this level, the fair value gap high being a stop, that's 1-to-1. That's like literally right smack on 1-to-1 risk reward. That's valid for me. That's valid. 1-to-1 is good enough. And that was the reasoning on it, guys. The stop is above the fair value gap high. Target was this low right here. Guess what? Perfect respect for it. Look how it respected it. Look how it did not close it. Look at that perfect respect for that imbalance right there. It respects it, sells off, takes the low. That's the play. That simple, that clean, that straightforward, right? Just like that. So yeah, guys, that was the setup. Again, if you want to join my free Discord chat where this play was posted, the game plan beforehand, there's going to be a link to that in the video description. And if you want to join the mentorship, As I was said, there's very few spots left to that mentorship. If you want to take part in that, there's going to be a link to the waiting list in the video description. And if you enjoyed the video, of course, leave a like, subscribe to the channel, and I will keep the content coming.